Let me ask you a question. Suppose you are sitting in a finance interview and an interviewer asks what happens when a company purchases inventory on credit. Which financial statements are affected when the company buys machinery? Can a profitable company runs out of cash? Would you be able to answer these questions confidently? The truth is that many finance candidates prepare hundreds of finance questions, but when the questions are related to financial statements, they struggle. And that's exactly why understanding financial statements can make a huge difference in the finance interviews. And today, I will explain why financial statements matter, what interviewers are actually testing, and how mastering this one topic can give you an edge over other candidates. So, what are financial statements? Before we understand why financial statements matter, we should understand what are financial statements. Just like we use our language to communicate with people, companies use financial statements to communicate their financial performance and financial position. Every company prepares three financial statements. So, what are the three financial statements that the company prepare? First one is income statement. It tells us whether the company make a profit or loss. Second one is balance sheet. It tells us what does the company owns and what does it owe. And the third one is cash flow statement. It tells us where did the cash come from and where did it go. Together, all these three statements tell the complete story of the business. So why interviewers ask financial statement questions? Because they want to test your accounting knowledge, your business understanding, your analytical thinking, and your problem solving ability. Anyone can memorize definitions, but understanding financial statements show that you can think logically. So now let's see our real interview example. Suppose you are sitting in a finance interview and an interviewer asks you one question that a company purchases inventory worth rupees 100 on credit. How would you answer this question? Think for 5 seconds and then I will explain. All right. So, the first and foremost thing that we should check for any finance question or any financial transaction, we should stick to our basics. And our basics is journal entry. So, first and foremost thing that we should check what should be the journal entry of this financial transaction. And then we should structure our answer, and you will be able to reach to your answer. So the journal entry of this particular financial transaction would be a company purchases inventory worth rupees 100 on credit. So the inventory would be debited by 100 rupees. And since the inventory has been purchased on credit, so the accounts payable would be credited by 100 rupees. And now we should see how would it impact the financial statements, right? So because the inventory has been debited by 100 rupees and inventory comes on the asset side of the balance sheet. So the asset side of the balance sheet would increase by 100 rupees. And on the other hand, accounts payable has been credited by 100 rupees. So accounts payable comes on the liability side of the balance sheet. So on the other hand, the liability side of the balance sheet would increase by 100 rupees. So only the asset side and the liability side of the balance sheet would change. There would be no impact on the profit and loss statement, no impact on the cash flow statement. The only thing which would be impacted is balance sheet. And this is how an interviewer wants to check whether you understand how a particular transaction flows into the financial statements. So another reason why financial statement matter is financial statements are everywhere. Almost every financial role uses financial statements, whether it is corporate finance, financial planning and analysis, equity research, investment banking, credit analysis, or its audit. Financial statements are the foundation of every career. So, if you want to make your finance career strong, you should understand financial statements first. So, now we will see how one transaction has a multiple impact on the different financial statements. Suppose a company purchases a laptop worth rupees 50,000 using cash. So, what would happen to the financial statements? As usual, we would see first and foremost the journal entry of this financial transaction. So the journal entry would be fixed assets would be debited by 50,000 rupees and cash would be credited by 50,000 rupees. And since fixed assets and cash both are the components of asset side of the balance sheet, so this would be the impact on the balance sheet side. And on the other hand, there is a cash outflow of 50,000 rupees. So it would also impact the cash flow statement in cash flow from investing activities. So this is how one transaction is impacting balance sheet as well as cash flow statement. And this is the kind of thinking what interviewers look for. So the biggest mistake that I see that candidates make, they just memorize the definitions like what is EBITDA, what is working capital, what is depreciation, what is gross profit, etc., etc. But when they are asked about how transactions impact financial statements, how numbers flow through the business, they struggle because they have not understood the concepts of financial statements. So, what interviewers really want, they don't want you to memorize financial definitions, and also they don't expect that you are a CFO of any company. But what they really want is that you have strong fundamental knowledge, strong logical thinking, ability to solve problems, and understanding of how business works. If I give you a transaction or a scenario, can you explain that impact with clarity? This is what they look for. And you can only answer this if you have understand the concepts of financial statements. So if you are serious about building your career in finance, don't go with advanced finance topics first. Rather, firstly focus on the financial statements because financial statements are the foundation of every advanced financial topic. So in the next video, we will start with the first and the most important statement, that is profit and loss statement. And we also call it as an income statement. See you in the next video.